Hello and welcome to you all. For today, I would like to explain the latest update from our volatility product from Hercules Volatility. I have changed it and made it to be much more easier to read the data from it. On top of that, I had improved the calculations to be more accurate. And of course, at the same time, I have tried to simplify the interface. So what we can see, from this table where we are right now, let's go initially with the menu. So for the menu, when here on the comparative symbols, it's what we would like to use as a volatility index. So in this case, for example, if we use SPX, we would use VIX. If we would use NASDAQ, we would use VXN. If you would use DAX, you would use VDAX, and so on. Then the volatility multiplier, it's if we want to take the default value or we want to take, the bigger standard deviation values. The year for the backtest, this is going to work in order, with the probability of the last year function, because we are going to have two variables. We are going to have two sets of data. We are going to have the full history, where it's going to take into account the entire candles that we have for the daily time frame. And then, for example, as a comparison, we are going to take a look at the probability of the last year, or in this case, the year that we establish here. And lastly, as well as very important, we can set up, for the current percentile value, we can take a look between a min and a max, which we can establish. So what does it mean? So if we are going to take into account, for example, the entire history of data on the daily time frame, we can see that we have an 84% probability that the market is going to stay within the candle that we have right here. However, at the same time, if the current percentile, which in this case is 4.37%, and we can see that the value that we have established from 0 to 100, it's of course is going to be the same value like we had from here, because this is going to be like from 0 to 100 without any restriction. However, because right now our percentile is, for example, in the 4.37, what we can do, we are going to tell him between 0 and let's say 50. So we can see that actually when we've been between 0 and 50, actually our win rate, it would be at 86%. And for example, if it would be in the other quadrant, if we would be from 50 to 100, you can see that in this case we would be at 81%. So that's why, by making the average, we will get to this. You will get to this point. Of course, for making the average, we also have to take into account the amount of candles. Because, for example, we could spend 60% of the time in one quadrant and 40% in the other. But yeah, we can see that in general, by taking a look on the entire history of data, we can see that from 0 to 50 percentile, we tend to have a much higher accuracy. However, if we will take a look compared to what we saw, for example, last year, we can see that in that situation, let's go back to 0 to 100. So we can see that for the last 20 years, we have 84% accuracy to stay, within the channel. However, last year we have 79. And this 79 is going to come, from the big volatility spikes which we had during the latest year. And at the same time, if we are going to apply the percentiles, like if I will see from 0.50, we can see the same, that we would have an 84% probability that the market is going to stay within the channel when the volatility it would be within 0 and 50. And for example, if it would be vice versa, you can see that in this case the same, we would have a 77%. So the probability would decrease by a big margin, when we would be in the second quadrant of the percentile. So yeah, this is how we can use the current percentile value and, with the probability from the current percentile. Let's go back with the default one more time. And then at the same time, because we have a cross which can happen top or bot, right? So in this case, for example, can have here or here, and we will have, for example, our candle here. At the same time, I have added another yield calculation to tell you, like, so okay, we have an 84% probability that the market is going to stay within this range. At the same time, we have an 88% probability that we are not going to cross this part. So you know, means that all of this is valid. We will have an 88% probability. At the same time, we have a 96 probability that we will go this way. You know, the market is going to stay within this place. It's coming from this one, because this one is telling me that from the current point, better said. So let's say, for example, this is our current point and this is our top and this is our bottom. This is telling me that I would have a 4% chance, or I would have a 12% chance that the market is going to go either in this direction or either in this direction. And if you are going to take those two values, you know, so if you are going to take approximately 0.12 multiplied by 0.04, this 0.05 in this case, this 5%, sorry, 88 with 96, but claro, in this case I'll have to divide by 2, but yeah, so this 84 that we see here is coming from multiplying this and from multiplying this, because if you will take 0. Sorry, you cannot see the window, but yeah, I can make it through a text. So if you will take, for example, 0.88 multiplied by 0.96, you would actually get, so 0.88 multiplied by 0.96, you can see that we would get 0.8848. And this 0.488 from 0.8 is the same value like we see here, from 84%. So yeah, let's remove the drawings for now. And the same situation, for example, for the last year. So in this case, for example, for the last year, we would have 79% probability. And this 79% probability is going to come from this and from here. So it's telling me that in the last year, we would have 90% probability that the market is going to go in this part. Then we would have a 12% probability that the market is going to go within this part. And then again, if you are going to take 0.91 multiplied by 0.88, we are going to get the values, which is going to be the 0.79. So if we will get 0.91 multiplied by 0.88, we will have the 0.8. So this 0.8 is going to be this 79%. Hope it makes sense. So yeah, at the same time it's kind of logical, because if you think about, you can see that overall when the market is bullish, we have much more probability to go upwards, right? To break upwards. So that's why this value 88% is smaller than the 96. However, last year it was a bearish market most of the times, so that's why this value decreased from here to here. So in this case, we would have 88% probability that we are going so in this case 12% probability we are going to break downwards, and only 9% that we are going to break top. Now, the big questions is like, how can I monetize and how can I make use, you know, of this edge? I'm waiting 7 more minutes, because in 7 more minutes, you know, the market is going to open, and then I'm going to explain. But let's take, for example, we can go already on the ES, and ES is going to give us more or less some idea, but yeah, actually we can wait here. But ES is telling me that more or less the price right now is on 4016, right? So let's go back on SPX. So we will take 4016. And then at the same time, if I go on the ES, we can see that actually the volatility for today, it would be, so it would be 1.25%. So from here, I will go 1.25, would be this one, and then the other one, 125, more or less like this. So this is going to be my channel for today for the SPX. So 1464 and 3966. So based on the probability that we have right here, we can expect that, you know, the asset is going to stay within this area. We are going to have 84% probability for entire history and 79% probability since 2020. You know, this is our current data that we have right here. And at the same time, we can also say that, for example, this part, let me move it a little bit like this. And then, for example, we can say that this part from here, in this case, I would have for the last year 88 and 91. So in this case, I would have 88% entire history and 91% last year. So this would be like this. And then the other one, this one would tell me that I'm having 96% entire history and 88% last year. So now, how we can monetize this? We have three options. So now I can make an iron condor, and this iron condor, we can be, in this case, from 464 3966. We can also make a call spread, and the call spread is going to be 4064 and 415, or we can make a put spread, and in this case the put spread is going to be 3966 415. But yeah, 415 is irrelevant. So what does it mean? I can make this call spread and say that, so for the call spread, it means that market will stay below 4064, market will stay above 3966. Now that's how you can translate. Or in this case, market will stay within 464 and 3966. So this is our, more or less, our initial values. Now we are going to wait for the market to open, and we are going to see other options which we are going to have available right now. So for example, for this situation, we can go with the lowest amount, with the lowest probability, so the probability from the last year. So in this case, we can use those values. The other one, you can make an average as well. So in this case, for example, it would be 80, this 2 multiplied by 2, divided by 2, multiplied, divided by 2, and the same. In this case, for example, we can make the averages. But for this scenario, I would say we can go, you know, with the last year values. But yeah, sometimes it's helpful as well, because we can look at these values, and if we are going to see that the current, for example, data, it's much higher or much bigger, you know, than the total average, then we can expect that over the next period of time, the market is then slowly to rebalance. So for example, right now it would be 91%, but for the next following months, it's going to go slowly towards the 88%. And the same in this case, for example, from the credit spread, from the put spread. So in this case, from the 88, it will slowly rise, you know, 96. Once we are going to have more bullish session, because right now it's being highly affected, you know, by the bearish session. And if we are going to take into account the entire history, the market was around 55 to 60% more bullish than bearish. So that's why we are having this type of data. So yeah, I believe and I hope, you know, it was more than and it's making sense, you know, to most of you, you know, the analysis which I'm making. But yeah, let's wait here one more time. So we want to be neutral. Our starting point in this case is going to be around 415. You know, so we'll go 415, and we want to go, you know, with an iron condor. We are going to make them both, but yeah, I just have to wait for the data to start, and once it's going to start, we are going to have, it's going to be more easier. Okay, so in theory right now the market is open. Okay, is it? Yeah, so the market is open, and it's open on 4,000. So we'll have to make all these adjustments for 4,000, but I can take the data, you know, from here. So it would be 3,950 and 450. So in this case, like I said, let's go for example with 450. So if I'll go with 450 and I will make in this case, you know, and I will sell, for example, this call, you can see that it's not worthy because it's already telling us that it's giving us a 93% chance. So this one, for example, right now for us, it wouldn't be so worthy to do it. However, if we are going to go with the other one, so in this case, for example, with 3,950, so if we are going to go with, let's remove this. So in this case, I would like to add a buy put. So the buy put and a sell put. And the sell put is going to be 3,950. So, and the buy is going to be 70. All right, it's going to be like this. So everything, no, sorry, before. Yeah. So in this case, if I'm going to take, you know, based on the calculation what we have, so in this case it would be 3,950 and 450. We can see that, for example, for this Tuesday, it's not going to be such a great trade because we already get from them, you know, the probability which is already quite high. So it's much higher than our edge, because we want, when we are going to buy or sell this type of options, we want the probability to be lower than what we get on our screen. So in this case, for example, it's not going to be worthy. However, we can make one more try, and in this case, for example, I can also add the buy call and the sell call. So let's go, for example, with so it was 450 and 3,950. To count the data from here, so from 50, 3,950, 450, and 3,950. What if I do like this? So for example, in this case, we will do in reverse. So it's telling us that actually it's a 32%, but the data, you know, in order to be either here or here, is going to be, it's much lower than that. It's around 20%, so it's not worthy. But yeah, we can go. This would be our more or less our. This would be our iron condor for today. But like I said, today is Tuesday, and for example, for today, it's not going to be so. Not going to be so great, unfortunately. So yeah, for example, this it would be one which we can use. Let's make a faster one. Let's take a look, for example, into the SPI fast. So let's see, for example, for the SPI. So in this case, for the SPI, we'll have the data as 394 and 404 approximately. So we'll have 394, 404. So we can see as well, this iron condor, in this case is giving us an 80% probability, and we are actually having on the last year an 82 and an 88. So as well, you know, it's very close, so it's not worthy. Let's go, however, with we can go with QQQ. Let's try QQQ as well fast, but for this case, for example, we'll have to use VXN. So the same situation, we will have a 90 and a 92. So in this case, we can go with 283 and 292. So in this this case, for example, 283, 292. Yeah, we can go with the 5 spread. Not such a big difference, but yeah, we can go something like this. So yeah, we can go with something like this, for example, for the maybe 2 is 2 spread, it's better. Yeah, so this is what we can go. This would be, for example, a very good trade for us. So we can see that in QQQ right now we would have 282.8, so 283 more or less we can use it, and 291.8 we can use 292. So with these values we can see that right now the strategy is telling me that we will have a 79% probability, and so we will have 22.8 divided by 177, so more or less we will have a 0.18 profit, and this multiplied by the probability they give us, so in this case the 79. So it's telling me that this, and then we will have to rest the 21. So actually they are telling me that each 100 trades we are losing 10 ROI. However, if I'm going to go back into the operation and I'm going to take the 0.2, but instead of 79 I'm going to multiply it by our profitability, and our profitability it would be in this case at 90%. So 0.1288 multiplied by 90%, and this minus 10. You can see that actually, you know, we would have a 1.5 ROI each 100 trades with this type of operation. So if this, for example, it would be a valid, you know, it would be a valid trade. So this one, for example, it would work. You can see that it would be, you know, in that scenario. And then as well, maybe if you want, we can go for the long part because it would have a 97%. So we would have 298, 292. So like for example, in this case, if I would remove those two, it's telling me that it's an 88. However, but we know we would, in this case, we would have a 97% probability that the market is actually going to stay value something like this, both of them can work. So if I'm going to apply the volatility to what we have, so from 292, so we would have 87 according to the strategy, but we actually have 97 according to the last year. So once again, if we will take this trade, we will have 12.4 divided by 187.6. So how it is the cost everything? 12.4 divided by 187.6, and we are going to multiply this by our strategy, which can be 97. So we are going to rest 3, and we can see that actually each 100 trades we would have a 3.4% ROI edge, you know, with this operation. So yeah, both of them it would be, you know, it would be quite good. And then at the same time, if you guys want, we can also go for the weekly, even though it's a little bit late because we are already Tuesday, but I believe, you know, we can still enter into it. So for Tuesday, for this week, last year, we don't have so great data, we could say, but however, we can try to build one and let's see how it goes. So in this case, it would be for 27 expiry, and for this expiry, we would like to go on 293, 293.5. I don't think we can, no. Yeah, the same, we can go 293, and the lower part it would be 273. So I want to buy put, and I want to sell put. So 273, I think it was the other one. Which one it was? 273, 274 we can go, and as well -2. So in this case, for example, it would give us a 75% of profit for the weekly, and we have a 73. So for example, in this case, it wouldn't be so worthy. Also because it's Tuesday, so it's best, you know, to enter, for example, on Monday if you want to get the most out of the volatility. So yeah, unfortunately, it's not so good. But then, for example, we can go with we can go back with the VIX, and then, for example, the weekly for last year, we can see in the case of SPI, we would have some amazing value. So we can try that instead. So for example, for 427, and we would like 385 and 408. 408, more or less, and 385 with 2 as well. But yeah, I can go with something like this and 13. Yeah, we can go with something like this, and in this case, well, it would be an 86% probability, but for example, we know from the last year it would be a 95%. So we would have, you know, this this sort of advantage if you would like to go, you know, for the Iron Condor session. And I believe for the SPX it would be kind of similar. Yeah, in this case, for example, for the similar, it would be 86%. But yeah, like I said, those data and those values, they would be best, you know, to be taken at the beginning of the session. So yeah. So yeah, I hope, you know, I made it clear with this new product. However, if you still have any questions, feel free to let me know. And yeah, I'm going to publish right now the update. So if you already have access to Hercules Volatility, you are going to be able to have access to this one as well. So yeah, thank you all for watching. I hope you enjoyed, and see you next time. Bye bye.